Everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. I'm having some internet issues. I don't know if you can hear me out there. If you could, would you let me know? Hey, Christopher. Hey, you guys are here. Can you hear me though? Oh, thank goodness. Sorry, everybody. My internet went out right before the show, and I tried to switch it over to my phone, and it didn't seem like it was working enough. Oh man, I've had internet technology issues since yesterday. So, anyway, I switched back over to my regular internet, and it seems to be working. So, thank you. I'm glad it's working. So anyway, how's everybody doing? This is Greg Gossett from Gossett Trading and Mentoring Live. Today is January 23rd, 2020. We're now on the final hour of the trading day. As I mention each day, in my opinion, the most valid prices to make your buying and selling decisions from are the prices that are just as close to the close as possible during the day. You just have a lot of noise with the algorithms and the day traders. At the end of the day, you have the large financial institutions coming in, making their trades at the end of the day with size and moving the price to what I believe is the most valid price of the day. So those are the prices that I like to make my buying and selling decisions from. So anyway, I'm glad we're coming through. That was pretty dicey there. I almost clicked the off button. I was like, well, I'm not going to do it. By the way, if this ever happens in the future, just know that I had some kind of technology issues on my end, and that's why I'm not on. So if that ever happens, you'll know why. So anyway, thank you all for coming. Really nice to have you here. Really appreciate it. Been kind of an interesting day today. We were down a lot earlier. Now we've rallied back. So yeah, interesting times for sure. So let's take a look here. Hey, Christopher Uhl is here. Hey, buddy, what's going on, sir? This is Christopher Uhl from 10-Minute Stock Trader on YouTube, by the way. If you haven't checked him out, please do. I actually did a podcast with Christopher Uhl and Steve on Christopher's YouTube channel, 10-Minute Stock Trader. So if you'd like to check that out, go ahead. Christopher says, hey, Greg, after our text yesterday, I thought I'd come support my favorite trader. Sorry, Steve. Oh, thank you very much. And Steve's probably laughing at that, but yeah, I don't know what to say about that, but thank you, Chris. Of course, Steve is an awesome trader, boy. He's, the best in my opinion. So Evan, how's it going? Good afternoon. Zach, good afternoon. Working now. Good. Ryan D. Hey, Ryan, nice to see you. JT says loud and clear. Oh, I'm glad to hear that. Nice to see you, JT. Thank you. Can you hear me? We can. That's funny. Good to see you. Can you hear me? Gamer Squad. Hey, Greg, I can hear you. Okay, good. Good to see you, David. Hey, Kamal, how are you, sir? Nice to have you with us, and I'm looking forward to our lesson tonight. Ryan, yep. Marco, hey, Greg and all. Hey, buddy, good to see you. Nice to have you here, Marco. Hope you're having a nice evening. Ryan says, I have Comcast, and mine did the same thing. Oh, yeah, I have Comcast also. Hey, Mount Doji, good to see you, buddy. Good to see you. Andrea, hey, nice to see you, Andrea. Thanks for coming. Sold my ammo this morning, realized it wasn't going my way. Okay, well, that's good. What's the key? Key is to get out with the small loss if you can. Yeah, definitely not going the right way. Hey, Murat, good to see you, my friend. Hey, you sent me, I got your email, and then I had all this technology issue, so I'll see if I can take a look at that in a second. Hey, Joe Turner, nice to have you here. Ryan D said, Christopher is how I found you. Oh, great. Thank you, Christopher. Wade Foster, hey, hope you're having a great day. Thank you, Wade. I am having a good day. Appreciate it. Toby, good to see you, my friend. Appreciate you being here. And Pat O'Connell, nice to have you here again, for sure. All right, so the internet's working. This is good. This is good. This is good. So, all right. So the plan for today, first of all, we're going to run the U.S. legal disclaimer. We're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, how I'm going to manage them going forward. After that, we're going to do a few minutes on trader psychology. Trader psychology is the most important skill you can learn in trading, in my humble opinion. It's important to learn how to look at charts, read charts, support, resistance. But at the end of the day, you can have the best trading approach, you can be the best chartist in the world, but if you don't have self-control over your trades, wins or losses, that is an issue. So please, if you're not following your trading plan, then you have to make some adjustments, everybody. You just have to make some adjustments, right? Reducing position size is a good idea. Having a friend, tell your friend what you're doing so they can, look over your shoulder and be your risk manager. Very important to have a risk manager in trading. And if you're not strong enough to do it yourself, then you have to maybe look outside, right? But the nice thing is if you do have a risk manager, I use that word lightly, but if you have a friend looking over your shoulders, looking at your trades, you will trade better. I promise you, you will. And after a while, it will become a habit. So we're going to do a few minutes on trader psychology. We're going to come back. We're going to go through my watch list. We're going to look at each stock. We're going to take a look. I'm going to look for three different things. One, a confluence or a combination of indicators lining up. If you want to put yourself in the best position to have a profitable trade, you have to be with as many other buyers as possible. And the best way that I have found to do that is to look for a confluence or a combination of indicators. I look at each indicator as a group of buyers. So if I have three different indicators coming together, then I have, the way that I look at it is three different buyers coming together, and the more buyers, the merrier. So step one, look for a confluence or combination of indicators and or groups of buyers. Step two, make sure you have a good risk to reward ratio. If you're going to risk $100, make sure that you're able to make $200 to the upside based upon some reasonable technical levels above you and reasonable and valid support levels below you. And then step three, just make sure you don't have too many correlated positions. You don't want 4 tech stocks. You don't want 3 tech stocks. Divide it up a little bit, maybe some healthcare, maybe some autos, maybe some tech stocks, maybe some energy, something. And even if you have a decent setup, it's a proper setup, gold, oil, bonds, silver, to diversify yourself even more. So those are the 3 steps. Look for a confluence of indicators. Make sure you have a good risk to reward ratio. Make sure you do not have too many correlated positions. So I'm going to go down through the watch list. If it looks good, I will place the order at the end of the day. Then after the market closes, if anybody has any questions, please let me know. I'm happy to clarify. Hopefully the internet will hold through today. And then if you have any, if you'd like me to take a look at any stock symbols, I'm very happy to do that as well. If you find a stock symbol that you think might be helpful for the group that you would like to get my opinion on before the market closes, please just type it in the chat, maybe put an asterisk by it, something like that, so I know it's time sensitive, so I can really try to get to it before the close of the market. So, all right, well, that is the plan. Okay, Mount Doji, KNX, and WAL were the only engulfing V1s I saw. All right, I'm going to run the U.S. legal disclaimer, Mount Doji, and then I will be back shortly, and we will take a look at those. Okay, so hang tight, everybody. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Oh, geez. Okay, good. I'm back. I thought I lost it there. All right. Good. Sorry about the discombobulation, guys, but when your whole internet and your whole system goes down right before you go live, it's kind of a scramble. So again, if this ever happens again, if I'm not here, it's most likely because I had some kind of technical issue. So, all right. Okay. We're back. All right. Mount Doji says KNX and WAL. KNX. Let's take a look at KNX. Yeah, it's pretty good. Pretty good. The only thing here, Mount Doji, as you know, it was above the value zone. It came into the value zone, but it did not have any sideways movement. It was down, 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 quick reverse. And in my opinion, in my experience, if you go down and have a big move right back up, more times than not, you're going to end up maybe going another day and then making a lower high and then coming back down. Although this is a beautiful V1, rejected all these moving averages, the 100, the 50, the 20, the 10, the 5, bullish engulfing. Yeah, I totally get it. Bounced off the 50, so it's not bad. It's a little high in the channel, between here and here. 75% is about the maximum I want to take. So the way that I look at this, two kind of faults here: no sideways movement, and if I did buy today, where it's at right now, it's right at the limit. So that's my opinion on that one, but it really doesn't fit the criteria for my trade. For my kind of trade. Let's look at wall. Well, huge comeback today, right? But I don't see a V1 here at all. So I think, I like KNX better, but I don't think I would take that personally. But let me know if you do. Mount Doji says, I should say the only ones I saw in my scan earlier today. Okay. But yeah, I don't see anything on. Well, Evan says, thoughts on TGT and RS. Okay. TGT. Yeah, not bad. Let's see how low we were today. Yeah. Not bad. It's a V1, under 30, over 30. Not too shabby. Not too shabby. Does it mean we're going to go up? Of course, we have no idea, but does it give you a good risk to reward ratio? Yeah, it does. I mean, it's a V1 and it's a V1 under 30, over 30, and it's a bullish engulfing bar. Having some issues here with the 100-day moving average, however, but yes, it gives a good risk to reward. Let's look at the weekly. Yeah, see, I like this because when I look at this on triple screen is something Dr. Alexander Elder came up with, looking at 3 times frames. I use the monthly, the weekly, and the daily, but the monthly is definitely in an uptrend. The weekly has pulled back into the value zone, which is good, and the daily has a trigger. So yes, not too bad. Not too bad at all. Yeah, that's pretty good. That's really good. Because look, Mount Doji, if you're listening, look at the difference. We're above the 1 ATR channel. We came back into the value zone. Do we have sideways movement? Yes, 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 we do. And then a big reversal. Yeah, I like that a lot. As a matter of fact, I may possibly take that. Let me just do the numbers on this. Yeah, I like that a lot. So what I'm going to do over here, okay, ROST. Yeah, this is I mean, this is picture perfect. Above the 1 ATR channel, come back into the value zone, sideways movement, spike down, reverse V1 over the 50. Like it a lot. I like it a lot. So what I'm going to do is I have two pretty good ones here today, as a matter of fact. All right. So yeah. Zach says, I have a new question every day, it seems. Can you clarify a V1 for me? Yes, absolutely. And by the way, Zach, in the description of this video, you remember the 4 videos that I have lessons on 4 different lessons. They're free. One of them I told you about the other day as far as scaling out. Well, there's another one, V1, V2 entries. And this is a perfect example of a V1 entry. A V1 entry means you have a bar that the current bar washes out. And when I say washes out, I mean goes below the low of the previous day. Has to be by at least 1/4, right? From here to here is an ATR channel. So I need at least a 1/4 ATR distance, from maybe this type of distance. Well, this one was almost a full ATR that it washed it out. So this is clearly legitimate. So again, a V1 is when you have the prior day's low, the current day washes out or goes below the prior day's low by at least a 1/4 ATR, and then reverses and closes above the previous day's close. So there's 2 things. The current day has to go below the previous day's low, and then the current day has to close above the current day's close. Does that make sense? So anyway, I hope that makes sense. But Zach, and then there's V2s, and I'll show you an example of a V2 when I see one. But like I said, in the description of this video, there's 4 links to 4 different lessons. One of the lessons is V1s, V2s, and I spend about an hour specifically on it. So does that help, Zach? All right, well, let's get to it. SPY. All right. World famous SPY trade. So I do buy the SPY at the end of the day, every single day. I buy it at the close of the market. I sell it first thing in the morning, regardless of technicals, regardless of RSI, regardless of anything. And the reason I do this is because of a back test from Lizanne Saunders at Bespoke Invest on Twitter. They did a back test all the way back to 1993. They tested 2 approaches. The first approach is buying the SPY at the open, selling at the close every day. So buy the open, sell the close, buy the open, sell the close. If you've done this every day since 1993, you'd have returned negative 13.9% return for all your troubles. However, if you did the opposite, which is what I do, buy the SPY at the close each day, sell first thing the next morning. So buy the close, sell the next morning. If you would use this approach, 634.2% return. Here's the chart. The blue line is the equity curve, or the blue line is the buy in the afternoon, sell the next morning. The orange line is buy in the morning, sell in the afternoon. You can see it's not even close. So based upon this information and based upon my own experience with this, that's why I use it every single day. So this is a great chart. It shows if you have an edge, what your equity curve can look like over time. It doesn't go straight up, doesn't go straight down. Goes to show you that you're going to have ups and downs in your trading. It doesn't mean the trading approach is bad. I mean, if you would have had this drawdown here and stopped, you would have, and then watched it go all the way up here, you're like, dang, I shouldn't have stopped, right? So anyway, I do buy the SPY every day at the close, sell first thing the next morning. Yes, today's was a loss. I bought it at the close of the market yesterday at 331.40. I bought it this morning I sold it this morning, first thing, 330.6. So I did take a loss overnight. Yesterday we had a gain, or a couple days ago we had a gain. Bought here, sold at the open, but this seems to have taken that profit right away back from the last win. So anyway, you never know. In May of 2019, I think I lost 80% of all of my trades using this approach, but for the year, it was very positive. So I like this approach. I like to diversify my trading approaches, some short term, some longer term. Just like you don't want to have too many stocks in the same industry, you don't want to just use the same approach. I mean, you can, but I just prefer to have multiple approaches. It tends to smooth things out through the year. So I will be buying this again today at the end of the day, and then I'll sell it first thing tomorrow morning. Zach says, so V1s are usually triggers. Yes, they are a trigger. That's exactly what they are, a trigger. You know, if we look at ROST, now keep in mind, Zach, there's lots of V1s that happen all the time, but they have to happen at the right place. They have to have the right requirements. You can't just take them anywhere willy-nilly. They have to be in the right setup. And the correct setup here is we're above the 1 ATR channel. We've come back into the value zone. We have nice sideways movement. And then we have. So the setup is from here to here. This all looks good. But then you need a trigger to get into a trade, right? You always need some kind of trigger. And V1s, V2s are generally my triggers. Under 30, over 30s are also a good trigger. But if you can get them all to happen at the same time, even better, right? So, all right, well, let's get on to my next position here, VIX. So, well, here's an example of multiple triggers. I bought VIX back here on the 21st of January. We had a V1, see the low. The day that I bought it, it washed it out, went back above. It also rejected the negative third ATR channel, closed back above. Right, so that is why I took it. And for the next day, it did end up a little. It didn't end up a little bit higher today. You know, when the market was down earlier, the VIX ran up, and I did hit 2 profit targets. So I did scale out, lock in these profits up here. The market can't take that away from me. That's why I like to phase out as it's going my way. When somebody really wants shares from me, okay, I'll sell it to them. Right, so I did hit 2 profit targets. Like I said, took the chips off the table. It has reversed. Obviously, I'm glad that I locked percentages of these up here at higher levels. And if I do end up getting stopped out of the trade, then it mitigates the loss on the portion that I have remaining. So that's why I'm a big fan of. Scaling out. 32.88. It's still above my entry of my day-in stop of 30 RSI. So anyway, profitable trade, at least, not a lot, but decent, because we locked in here right and one right at the top. So as long as this stays above 30 RSI, I will continue to hold this. All right, XLU. Okay, well, this was a return to value trade. You can see here we were above the 1 ATR channel, the green line. We came back down into the value zone, see the sideways movement, and then the trigger. Now, I used a different trigger on this. I was looking for a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1, but did not close above day 1's close, but the next day, intraday, did, but then closed below. So it wasn't a valid trigger. So I used a different trigger. It's called the fake out bar. See this bar here? We have a high. Next day, we go higher and close lower. This is a V1 to the downside. See, we have the high, washes it out, closes below the previous day. This is a bearish formation, but if you can get a bearish formation like this immediately, followed by a bullish move up, showing that this bearish formation did not work, that's why I bought it. Bought it here at 64.22. You can see 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row this trade has gone up. This has been a fantastic trade. Did hit 2 profit targets today. I've only got a few shares left, honestly, because I'm right here at the 6 ATR channel. 6 ATR channel is always my ultimate profit target. So I'm going to take this one off today. It's at 84.55 RSI. I've got the huge whole meat of this move here. This is a fantastic trade, especially on something like utilities. It's up almost 6% from entry to where it is right now. So I am going to just lock this in today, get this off the board, because I've scaled out of most of my shares. So anyway, fantastic trade. Glad I hit those last 2 profit targets, but I will be getting out of that today. So that's it. That is it. Now, let's look at some other trades that you've been kind enough to share with me. So Amon Solo bought this V2, Zach. Here's day 1, here's day 2. Day 2 washes out day 1's low, but does not close above day 1's close. But the next day does, making this a valid V2. And in conjunction, it went under the 200, over the 200. Moved up nicely for him for 3 days. It has been pulling back. It hasn't closed below the previous day's low. I know Amon Solo is traveling right now, so I honestly cannot say whether or not he's still in this trade. We never got a close below the previous day's low, so not sure. Next trade, Bing He. Okay, so here's a V2, Zach. Day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1's close, making it a V2. It also went under 30, over 30, under the third ATR channel, over the third ATR channel. This was his trigger. Bought it here at 35.45. Moved up very strong. This is 3 times leverage, so this is a big mover. Moved up very strong today, although is pulled back. I know Bing He does not phase out because of the commission price that he has in Singapore. But anyway, Bing He, let me know what you're going to end up doing with this trade. But glad to see you're profitable on the trade. William Green. So William Green bought Ford back here at 921, and then it dumped. I know he had a stop down here at $9. I don't know if that was an intraday trade, if he's basing that off the end of the day, or if it just any time it hit today. So William, if you're out there, let me know. Joe Turner took a nice trade here, 62.59, under 30, over 30. This has moved up nicely, so that's a great trade. Watch out for the 200 there. WBA we've been talking about. Here's a V1. Here's a V1, Zach. Here's day 1, day 2. Day 2 washes out day 1, closes above day 1. But in my opinion, it is a V1, but it's not a valid V1 because we're still under the 30 RSI. I would need to see a move above the 30 RSI or big, nice, strong close above the 200. And then Bing He took a paper trade on this. And he's just exactly even. But this was a paper trade, so this wasn't valid. So, all right. So that's that. So again, overnight SPY trade was a loss. I'll be buying this again today at the close. VIX moved up nicely earlier, hit a couple profit targets, now has reversed, but I'm still going to keep this over the 30 RSI. And XLU, of course, this was been a monster trade for me over the last couple weeks, and I am going to get out of all of this today because it's basically to my profit target. So that's it. Hey, Christopher, good to see you, my friend. Thank you for coming by. Mount Doji says, very interested to hear what you have to say about XLE and its back test going under and over the 30 RSI. Well, I don't have a back test on XLE going under and over. My software doesn't allow me to do the back test on that, but this is interesting. It's definitely under 30, over 30 right here, and not quite a V1, but working on that. That looks pretty good, actually. So actually, let me run the numbers on this. Okay. Evan says 6 trade on XLU. That was a pretty good one. Definitely a pretty good one. And you're welcome, Zach. Hey, Steve Burns, good to see you, my friend. Appreciate you coming. Always an honor to have you here. Thank you so much. Steve says XLE usually bounces around the 30 RSI in the 200-day moving averages. I have had several good trades around those areas in the past 2 years. Yeah, I mean, it's not bad. It's not bad. I mean, we did reject down here, but the main thing, of course, we don't know if it's going to go up, but does it give us a good risk to reward ratio? Yeah, it's a 30-80. If we're wrong, we can be wrong small. If we're right, we might rally up to here. You never know, right? Steve says, great XLU trade. So well done, my friend. Thanks, bud. Appreciate that. Bing He says, I think I still hold SDOW. A bit concerned it rejected the 10. Yeah, I know. Yeah, it definitely did reject the 10-day moving average. It's a tough one to say. It just depends what your plan is. If your plan was if it rejects the 10-day, I'm going to get out, well, then you should get out. But if your initial plan was I'm waiting for a rejection of the 50 RSI or a close below 30, then maybe you want to stand tight. I don't know. Let me know what you end up doing. This Ross looks good though. I'm telling you what, looks good. All right. So listen, everybody, this is the time of the day where I do like to talk a little bit about trader psychology. Some great Facebook pages out there, some great Twitter pages out there that spend some time and energy and help us each day by posting great stuff. One of my favorite is Stephen Goldstein at AlphaMind101 on Twitter. If you have not subscribed to him, I would suggest it. He has a great channel. He posts great information. He has a great podcast. He interviews traders from all over the world. He actually interviewed me on there. If you'd like to listen to that interview, it's on my YouTube channel under interviews. So Stephen says, one edge alone is rarely enough. To succeed, traders need multiple compounding edges. These may include aspects of, listen to what he says, right? One edge is not enough. And similar to my trading approach, one indicator is generally not enough. I like to have multiple indicators. So, if we expand that into psychology here, you need more than just one edge, psychological edge or trading edge. So these may include aspects of process. Of course, you need a process. Mindset, hugely important. Method, of course, you need a plan. Risk and money management, most important. Only thing you can really control is what your risk position is. Risk intelligent, right? Being intelligent about your risk, understanding to keep your risk small. Emotional intelligence, you have to know yourself. You have to have emotional intelligence. Market knowledge, sure, you need to know about the market. Personality congruence, right? Self-awareness, you have to be self-aware, and you have to be humble and humility. So, trading is not just what's my setup. Trading encompasses everything: psychological, mental, self-awareness, having a plan, understanding risk, understanding position size. That's why it's so tough. Right? So you really have to become a complete person and have a complete plan, not just with your trading, but with yourself. So thank you, Stephen. Appreciate that, bud. And like I said, if you haven't subscribed to Stephen Goldstein at AlphaMind101 on Twitter, I would suggest. He's a professional trading coach. He was a retired professional trader. He knows what he's talking about. Okay. All right, so I am running late. So let's just run down here real quick. Of course, Apple is too high. I don't like to buy up here. I want to wait for a pullback. Will it ever come? I have no idea. I mean, it will come, but when will it come? I have no idea. So I just cannot get involved at Apple at these high RSI levels. I have to wait for a pullback minimum into the value zone. Adobe, minimum into the value zone, need a pullback. Amazon, well, it's up a point. We have made a lower high. We came back into the value zone. We do have a lower high, but now I need to wash out this previous low and then have a reset of V1, V2 to get interested. Boeing, shoot. You guys remember I bought Boeing 2 days ago here. Yesterday, it closed just barely under the 30 RSI. If it had closed above, I would have kept it and would have got involved in this game, but unfortunately I missed it. Am I going to buy it today? I don't think so. Yes, it went under 30, over 30, but what I don't like is we're right in the middle of this big, old, huge down bar halfway. When you have a big down bar and you rally to 50%, that's usually where it's going to stop, and that's about right where it stops. So I'm not going to buy this. Because of this, what I'm going to wait for is either another under 30, over 30, or a move into the value zone and then a couple day pullback and get that higher low V1. Buying lower lows, not saying it's a bad idea, but you have to be a little quicker on the trigger to get out. Higher lows, people tend to stay in longer. So I'm going to wait for a higher low on BA, but unfortunate that this got me out right at the last second, but that's how it goes. Berkshire Hathaway was above the 1 ATR channel, looking for it to move into the value zone. Sideways movement, similar to Ross, like this, right? Above the 1 ATR channel, sideways movement, V1, V2. That's what I'm looking for on Berkshire Hathaway, but it's not there yet. Beyond Meat, down a little bit today. Congratulations to Steve. Steve bought this 520 crossover here, had this monster trade, got out here for I think a 38% gain. So biggest gain I've seen. So congratulations, my friend. But nothing on Beyond Meat. Caterpillar. Here's a V1, but it's not a valid V1. This day one bar is larger than 1 ATR. Yes, we washed it out. We closed back above, but just too strong to the downside. I would look to buy under 30, over 30. Dow Jones, well off of its lows, but still I needed to come back into the value zone to get interested. Walt Disney, I was considering buying this, but it did not trigger yesterday, thankfully. So I did avoid this right here. We're at a 40-60 RSI. At this point, I would look for a move back up into the value zone with a couple days pullback and then look for a higher low V1 or V2 or a 30 RSI confluence here with the 100-day moving average, which would be awesome also. So nothing on Disney. Etsy, looking for a pullback. Facebook, looking for a pullback into value. Gold, nothing there on gold. Looking for a 5 EMA to cross under the 20 and then back over, or a pullback into value zone and look for a V1, V2 setup. Google up a little bit today. Very, very high. Too high. Need a pullback. Goldman Sachs, need a pullback into value. Home Depot, very, very strong up here, just too high. Need a pullback into value like with most of these stocks. IBB did bounce off the 50-day moving average, which is interesting, but not quite enough for me. Intel, massive big day. I believe we have earnings after the bell, so definitely not going to be buying into earnings, but look at this huge move. But again, you know, move into the value zone, sideways movement. It did have a V2 here, but I couldn't take it because this high here was lower than this. I needed it to wash out this low before I took it. Unfortunately, I stuck to my plans, and unfortunately, I missed the trade, but that's okay. That's how it goes. Better to stick to your plan. IWM into the value zone. V1, yes. Too high in the channel? Yeah. From here to here, 75% is my max. We're almost right there at the one, so I have to let that one alone as well. Johnson & Johnson, nothing there. CarMax just keeps going up. My gosh. Need a pullback into value. Coca-Cola, very, very strong. These defensive consumer stocks need a pullback into value. Lockheed Martin, need a pullback into value. MasterCard, pullback into value. Sorry, I'm a broken record. Here's a V1, day one, day two. Day two washes out day one, closes above, but it's too high. It's at a 76 RSI. You know, Merck's interesting. I'm not going to buy it here, but you do have a confluence of indicators, but not the kind, just not enough. See how we bounced right off of the 50-day moving average? Generally, moves back to the 50-day moving average, especially if the first one after a big move is generally a pretty good place to buy a bounce off the 50. And it did test this previous low. So we did have a bounce off the 50. We did have a false breakout for this range. But, you know, if we had a 30 RSI or a double bottom with a bullish divergence, I'd be more interested. But it's not bad. I mean, it does offer a good risk to reward ratio with the close under the 50. But I'm just going to let this one go. I think there's better. Microsoft, slightly up today, need a pullback. Netflix, look at this big bounce. See, this one did tag the 200-day yesterday and closed back above, but it didn't have enough for me to buy, but it didn't care. It's up 6% today, right back up into resistance here. Just nothing I can do with that. Nike, okay, so look, Nike was above the 1 ATR channel. Now it's coming, peaking its way down in the value zone. Just need that sidewards movement in a V1, V2, and I would buy that, but not yet today. Philip Morris was above the 1 ATR channel. Now we're in the value zone. If we could get some sideways movement, that's what I would be looking for. We had, where's that last trade we had? Yeah, here, this was the last trade. We were above the 1 ATR channel. We came into the value zone. We went sidewards. I took this V1 here, day 1, day 2, washed out day 1. So again, above the 1 ATR channel, into the value zone, sideways movement, at least a couple days, and there was my trigger. And you can see that was a fantastic trade, scaled out all the way and got out there. So that's what I'm looking for again. Now we're above the 1 ATR channel, looking for a pullback into value, sideways movement, rinse and repeat. PayPal up nicely today. Too high for me though. Q's too high for me, need a pullback. Silver, so we're getting somewhat close to a potential buy on silver. Not today, but the 5 is almost crossing, getting close to crossing under the 20. If it closes under and then closes back over, that will be my signal to buy. Just like when we bought this one, we bought the 520 crossover here in the value zone, and that was a beautiful trade. Scaled out all the way up to there. SPY, of course, we have the overnight SPY trade. Going to buy that today. Bonds, really strong, but nothing there. Tesla up again today. Need a pullback to get interested. How are we doing on time? Twitter, need to pull back into value. United Healthcare, still above the 1 ATR channel. Needed to pull back in here. Look for V1, V2. Oil, Well, oil, we have an under 30, over 30. We did test this bottom. It's a potential, I'll mark it. VIX, of course we have VIX. We hit the 2 profit targets today. I'm still holding this for a close under the 30. Verizon, nothing on Verizon. Walmart, nothing on Walmart. There's the energy sector we talked about earlier. Now, of course, I wouldn't buy oil and the energy sector at the same time, right? So I'm going to mark that one. We'll take another look at it. Financials, big reversal back up, but nothing there. Real estate, big bars up here, up, down, up, nothing there. Need a pullback. Utilities, of course, we have this. I'm going to be exiting the rest of my shares here at the end of the day. This has been a monster, but it's a perfect example of going into the value zone, sideways movement, indecisive, and then a trigger. And healthcare. All right, so I want to show you a couple other possible. Okay, so Ross, I really like Ross. I mean, above the 1 ATR channel, in the value zone, sideways, 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 and a beautiful V1. And if you notice, look, here's the green triangle. Here's day 1, day 2 went above and closed below. See, this is bearish. Went up, went down, but immediately reversed here, going over that first day, in addition to the sideways movement, everything else. So I really do like Ross. And Zion. Okay, so actually I'm going to be teaching this to Kamal later tonight, but you know, my deep dips are moves down to the 200-day, under the 30, back over the 30. I learned this from Steve Burns, but another valid entry on a deep dip is to the 100-day moving average, but not just any 100-day. You have to have a confluence of the 100-day and the 30 RSI, and that's exactly what we have. So yesterday we went under the 100, over the 100, closed over. Under the 30 RSI, closed over. Today we again tested below, under 30, and now we're back over 30, under the 100, over the 100. Is it scary to buy here? Yeah, of course it is. Does it give a good risk to reward ratio? Yeah, it does, because if it closes under the 30, I'm out. If I have a winner, I might go all the way up to here. So, you know, I have theoretically this kind of downside move with this kind of upside move. And I've had 2 days where it's tested under here. The market didn't like it. Under the 100, it also didn't like it under the 30 RSI. So I've had 2 days of rejection. Doesn't mean it can't go down tomorrow, right? But I do like this setup. This is a perfect confluence of a 100-day moving average and a 30 RSI. So the question is, it's been a while since I've had some possible trade setups. Guys, give me 30 seconds. Katie, move around. Sorry, I'll be right back. Okay, so let's look at the possibilities then for today. All right, so here's oil. Let's look at the weekly chart. We've lost the 100-week moving average. That's not particularly good. We are back here to some of this support here. If we switch over to the daily, under 30, over 30. And then let's look at XLE. So do you see on the weekly how we've rejected the -1 ATR channel? That's why I like to look at multiple time frames. So if we look at oil, we have lost the 100-week moving average. That's not as strong as XLE, rejecting the -1 ATR channel and having this under 30, over 30. So I would pick XLE over oil. So here is ROST. Here is Zion. So here's some retail. Here is some banking. And here is some energy sector. So I have to watch this one at the end of the day, see if it does close above 30 RSI. Hey, Frank has a poem. Good to see you, buddy. Frank says, trading is not about kicks or get rich quick. It's attitude, patience, and will. A hunger to learn you can never fill. Because to start with a little and end up with a lot is going to take all you got. Ah, that's good, Frank. Trading is not about kicks or getting rich quick. It's attitude, patience, and will. A hunger to learn you can never fill. Because to start with a little and end up with a lot is going to take all you got. Truer words have never been said. Thank you, Frank. It's awesome. Oh, Steve says SQ bounced off the 200-day today. Oh, I haven't looked at SQ for a long time. Pretty close, at least. Maybe our chart readings are a little bit different. It did. It's a little too high for me to buy here, unfortunately. But a V1 also. Hey, Glenn, good to see you. Hi, Greg. Still holding PayPal. That's awesome. I've been watching that. From 112. Now we're at 117. Fantastic, my friend. Fantastic. Hey, Kurt. Good to see you, buddy. Hope you're feeling better over that flu. Nice to have you here. Toby says, good one, Frank. Very true. Frank, thank you, Toby. All right. Well, I'm going to have to make a decision here. Energy may fail. It's at 30.19. Ross definitely looks the best. The thing about this energy, it only has one signal, under 30, over 30. That's the only signal that it has. It doesn't have a V1. It still has the one ATR, the -3 ATR channel over. Yes, it did test this low a long time ago. The longer a low is behind you, the further away it is, the less relevance it has. If you had a low and then, 20 days later you tested that low, it's better than, 2 months behind you. It's still something, but I think I'm going to let this one go. Again, just because there's only one indicator. You know how I like to have multiple indicators. Okay, so I am going to let that one go. ROST, I am definitely going to buy. XLU, going to close that at the end of the day. Boy, I mean, the demand for utility is unbelievable, right? All right, so I am going to buy ROST, full position. My stop is going to be a close below halfway of the washout bar of this V1 bar. Right about here is going to be my stop. There we go. Now try to buy this as close to the end as possible. And Zion. All right. Yeah, that's a great poem, Frank. That's a really great poem. For sure. I mean, I said this before, but not only is Frank's a great being able to just put the poems together, but what they mean in their content is just spot on. Just spot on. All right. So I do trade a couple accounts, so I'm going to have to keep that in mind as far as I'm going to have to make 4 trades here. VIX is still okay. Okay, so what I'm going to do, I'm just going to go ahead and get rid of, the, my XLU. Free up a little time here. All right, so XLU is over. What a trade, holy smokes. Okay. Christopher says, is that Rose Hill Resources? ROST? It's Ross Stores, if that's what you're talking about, Christopher. Glenn says, TLT closed above 141, but will be my trigger to cut equity exposure. But SMH above 145 is keeping me in now. SMH. Oh, very nice. Very nice. So TLT closing above 141 will be my trigger to cut equity exposure. All right. So what Glenn's saying, if it closes above 141, he would cut equity exposure. All right. So Ross Stores definitely is going to be a buy. Again, this looks so good, but it doesn't mean it's going to go up. 100% it's good. It qualifies at every single level. But just because it looks great doesn't mean, hey, this is going up and you're going to hold on to this thing even if it starts going against you. I will buy it, but if it closes below, I immediately out. Remember, that's the formula for successful trading, everybody, is when you're wrong, just be okay with it, get out, take your small loss. You won't even think about it in a day or so and get on and look for a positive trade, right? And then have the guts to stay in the trade if it's moving your way. Okay, well, I'm glad I waited the last few minutes here because things have come off. Okay, with the minute to go, I'm going to start getting this. All right. Okay, there's one order of ROST. There's another order of ROST. And then Zion. Okay. All right. So that's it. I'm out of XLU, holding VIX, buying SPY at the end of the day. Just bought Zion. Okay, there we go. So let's see where I got this stuff at. So SPY, got that at 331.72. Zion Bank, 47.76. And Ross, at 118.29. Okay, so XLU is out of there. Thank you, XLU. That was a really, really great, nice ride for sure. All right, so SPY, 331.72. Been a little tough with the SPY trade so far this year for me. Ross, 47.70. Oh no. Zion, 47.76. And on this particular trade here, any close below the 30 RSI, I'm going to get out. So, you know, it shows that I had support at the 30 RSI. It shows that I had support at the 100-day moving average 2 days in a row. If it loses it, I get out, hopefully for a small loss. If I'm right, I could have the potential for an outsized move to the upside. And then Ross, that's going to be my stop, halfway of today's washout bar, halfway, close below halfway. And 118.29 is where I bought that. Well, we finally have some positions. We'll have to see how these go. I'm interested to see, did XLE close above the 30? Oh, yeah, it did. It did, but that's all it had. That is all it had. All right. So, SPY position, 331.72. ROST, beautiful return to value with the beautiful V1 here at 118.29. My stop is a close below halfway. VIX, bought that a couple days ago. 2 profit targets today. Down, still in the money, luckily. Closed below a 30 RSI, and then Zion's closed below 30 RSI is where I will buy Zion's also. Wow, we finally actually have some setups. I wanted to show you. I was going to do this, and then my internet had a problem. But Murat sent a chart today. Let me see if I can move this over here. Look at this beautiful short he had up here. I believe, yeah, shorted up in this range here. Wait, I just want to make sure because I'm looking at the picture now, but I don't have the. Yeah, on the 20th. Oh, okay, it was here. I'm sorry, guys. It was here that he shorted on the 20th and then had this nice move down. So congratulations. That's excellent. Murat's a great trader. He's a good energy trader for sure and a good trader in general. Okie doke. So listen, if anybody has any other questions, comments, want me to take a look at anything, I'm happy to do so. Before I do, I just want to put in my quick little daily plug, let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I've had really good success with my clients. I do offer a course. It's 5 sessions. Each session is between 2 and 3 hours. It's live. It's just you and I. It's pretty intensive. Kind of the format of the course is the first part of the lesson I teach when I'm teaching. Second part, we do a lot of chart study. I ask you questions. I have you teach it back to me. And I think by the time you get done with this course, you're really going to be able to look at the market in a different way. And, I teach everything I've learned over the last 24 years as a full-time trader, everything I learned from my coaches and mentors along the way, everything I've developed. So it is $1,000, but I think for the money, it's really valuable. It's not like it's a couple-hour course and that's it, right? I mean, it's between 10 and 15 hours of one-on-one working. So, if you're interested, my email is in the description of this video. You can also reach out to me on Twitter. Before we set up a lesson with a potential student, I like to have a free Skype call with them just to get to know them a little bit better, just to understand where they've come from, how they're doing with their trading, what their challenges are, what their goals are. And so I can take all that information and put it together, for a lesson plan to hopefully have you achieve those goals. So again, if you've been thinking about it, please let me know, reach out to me. We can schedule the free Skype call, and there's no pressure with the Skype call. I promise you. I really promise you. Just, want to see if we're a good fit. So that's that. And then if you like today's live stream, if you could hit the thumbs up button, I would really appreciate that. I always appreciate that because it helps YouTube kind of see that, the channel is valuable, people like it, and helps it get it out to more people. There's a lot of people out there that have a really difficult time trading. They maybe know a little bit about trading, but they haven't really put together a full plan. And hopefully if we could get them to this channel, by osmosis and listening to it each day will help their trading. So if you could, before you leave, on your way out, if you could hit the thumbs up button, I would really appreciate it. Let's see. Zach says, why multiple orders out of curiosity? I manage some other people's accounts, Zach. So I have multiple orders in mine and theirs. So that's why multiple orders. Christopher Hitchens says, Intel earnings significantly up. I'm not surprised, with that big run up that we've had. Seemed like somebody knew something, huh? What's it up? Oh my goodness, it's up 7%. Holy smokes, it's up $4. Wow. Wow, unbelievable. Thanks for sharing that. Evan, was SYY a good setup today? Sideways movement followed by a day up, then gap down and reverse. Since it was yesterday, did it need to wash out lows from a few days back? Well, let's take a look-see. So, Evan, this is a higher low V1. See how we closed below the 1 ATR channel, then we rallied into the value zone. The only thing that wouldn't let me take this particular trade here is that we were under the 1 ATR channel, came into the value zone. But yes, it is a higher low V1, but I prefer higher low V1s when I don't just have 1 day down, I have 2 days down. So like if we went up into the value zone, then we had day down, and then a V1 or V2. This is sideways movement back into the value zone. Just 1 day down is all. And then the V1. I mean, it's not bad. Listen, it's not the worst trade in the world for sure, but you know, just me personally, because we were under the 1 ATR channel into the value zone and just had 1 day down. The reason I like to have 2 days down, everybody, is that it's kind of a selling cycle. You know, you go down 1 day and then you have some follow through and it kind of gets rid of the sellers. And then if you can reverse back up, I feel like you have a better chance of having a move up instead of just a 1 day down and reverse back up. So I would not take this for that reason, Evan. Bing He says, for Zion, if the gap is not filled within 3 days, do you hold it even though still RSI? That's a very good point. I was looking at that as well because, you know, if you have a gap, if you can fill that gap within 3 days, so here's the gap, here's 1 day. If after 2 days, if the next day doesn't fill it and the next day doesn't fill it, then it's more negative. If within 3 days after the gap, so here's the gap, day 1, day 2, or day 3 can go above, it's a much better signal. That's a tough one. Bing He, I think I probably would, I think I would definitely consider that if the next 2 days it hasn't done anything. Because, you know, if it should bounce here, but I have a feeling within the next 2 days it's either going to move up or I'm going to get stopped out. But it's definitely something that I'm going to take into consideration. If within the next couple days it doesn't do anything or move, then yeah, I probably will just let it go. But very, very good point. I'm impressed that you brought that up, Bing He. Evan says, being away from the stream for a couple weeks has got me rusty. Thanks for the refresher. Yeah, you're welcome. You're welcome. I mean, listen, there's some times where, let's see. There's sometimes where just the 1 day down is fine. I mean, on the bright side, look, we have the green triangle. And again, what's the green triangle? Here's day 1. Here's day 2. Goes above and below. That's bearish. Today, we did a 180 on the bearish and went right up. So, I mean, it's okay. I don't think I would have taken it, you know, if I would have seen this in real time, just because of the 1 day down. Although the negative V1 to the downside immediately followed by the upside, similar to the utility trade. But the utility trade was better because it was in the value zone and it's moving sideways. This made a lower low here below the 1 ATR channel and just rallied in and then back down. But anyway, I'm glad to have you back, Evan. Joe says, I've been in Coke for the long haul since 2012. Very nice. Now that I am retired and work with the stock market every day, I am wondering if I should start selling it before earnings and buy it back after. Well, that's a good question, Joe. You know, me personally, I don't hold through earnings. You know, it's one of the quickest ways to lose a lot of money. But as with Intel, it's one of the ways to make a lot of money as well, right? If it gaps up like Intel did today. But I always focus before making money on risk management. So that is why I never hold through earnings. I'm not saying that you shouldn't, right? You're a long-term holder with this. You're definitely not going to tell you what to do. But, you know, if you're asking my opinion, I mean, if I was in the trade after this big, strong move up and earnings, you know, me personally, and again, not telling you what to do, but me personally, I certainly would not hold through earnings, because all this, they may have great earnings. This might be priced. This may be pricing in the great earnings also. You've seen times where people have had great earnings and then it's fallen. You're like, what's going on? It's because the market priced it in before the earnings. So you're just going to have to make that decision, Joe. But if you're asking me personally, I do not like to hold through earnings, because it really is the best way to lose a lot of money quick. You can make a lot of money quick as well, but I always defend against the losing money part first. Murat says, just be careful. For some reason, the market tends to sell off after the Intel earnings. Oh, interesting. For some reason, the market tends to sell off after the Intel earnings. Look at S&P after the past 3 Intel earnings, especially April 25th and July 25th. Oh, it's good to know, Murat. Thank you for sharing that. Strange correlation, huh? Murat says, Joe Turner, how many earnings have you gone through? What was the outcome? Bing He says, I wanted to take ROST trade, but the target for me is only 2% plus versus 1% stop loss. Will not give me a good risk to reward with my commission. Very difficult for me to make money. Frowny face. Yeah, it's definitely tougher to make money when you have commissions, and expensive commissions like you do, Bing He. But the risk to reward ratio here for me, I don't really look at it as a 2-to-1, because my risk is going to be from here to here. My potential reward could be back up to here. So the way that I look at it, which may be different than the way you look at it, Bing He, but I think the risk to reward is pretty good here, but we'll see. Evan says, I also looked at JP Morgan today. Let's see. Was going to take a position if it closed over 50 RSI. It did close over the 50. Wiped out this previous low. Did not have a V1, however. Didn't quite get there. Could have it tomorrow, right? Here's day 1, day 2. Day 2 washes out day 1, but didn't close above day 1. The V2, if it closes above day 1, or the next day, will give us a V2 if it closed above day 1. But this V1 didn't, it's not a V1 because it didn't trigger, but it got close, but it sets up for potential tomorrow as well. Evan says, something is wrong with my RSI. Well, my settings here are 14 for the RSI. Maybe yours are a little different. Let's take a look. Christopher Hitchens says, Bing He, how much do you get charged and where are you based? Joe Turner says, I have to do some research on the KO earnings. There's been a lot. Yeah, for a year, since 2012. That's a lot of earnings. But, if we strictly look at Coca-Cola, I mean, if we look at the weekly, we're getting very close to the third ATR channel. Of course, it doesn't mean that you can't go higher than that, but, it's stretching the rubber band pretty tight there. The daily is above the third ATR channel. It's very strong. It's, if we only knew, right? If we only knew, Joe. But the problem is, even if you know what the earnings are, it's still risky. Because like I said before, sometimes you have great earnings, but the market already priced it in before. And so it's a kind of a buy the rumor, sell the fact kind of situation. So even if a company has really great earnings, if you've had a huge run up into those earnings, there's a chance it could go down. But again, I don't know. I'm not telling you what to do, but one thing that I am, very strict about is, first thing, protecting money. Second, make money. And the best way to protect against a big possible loss on earnings is just not to be in. But you let me know what you're going to do. Be interesting. Oh, I'm so glad Christopher Uhl stopped by. Appreciate that, Chris. How's everybody else doing with their trading this year? Anybody doing okay? This has been a challenging month for me. Definitely up, but not that much, because I've had to be selective in my trades, and I haven't had a lot of trades. So it's a little, it's a little frustrating, because my filters tell me that I can't buy this high, and then the market keeps rallying high. But as Steve Burns says on his weekly newsletter at newtraderu.com, this kind of move happens once every 10 years, once every 20 years. So, if when the readings start getting up into the high 70 RSIs, if 90% of the time it moves back from there, I don't want to initiate any positions here. It doesn't mean this time it can't go up, but I have to play the odds. Well, selling the earnings and buying the dip, I mean, that's what you'd want to do. But of course it might go up too, right? Then you sell the earnings, you have to buy higher. So yeah, it's a conundrum. Murat says, my carbon short is still open. I hope it hits my target tomorrow. I don't want to keep it over the weekend. Oh yeah, the carbon shorts we were talking about. Well, I hope it hits it for you tomorrow as well, Murat. Frank says, earnings are where even a penny has its value. That's correct. If they beat by a penny, if their earnings beat by a penny, is that what you mean, Frank? All right, so Ross is up after hours. SPY is up after hours. VIX is down a little after hours, and Zion's Bank is even. We'll finally have some positions, so how about that? So I have a lesson tonight with Kamal. I'm looking forward to that. He's been a great student, and hopefully he will learn some things tonight. We'll have to watch the XLE trade tomorrow and see how that does. But again, the reason I didn't take the XLE trade is, yes, it did go under 30 over 30. It definitely did. But that's all it did. If it would have had a V1, I would have felt better about it. If we would have had a double bottom with a bullish divergence, I would have felt better about it. If we would have closed back above the third ATR channel, I would have felt better about it. Or if we had a recent previous low that rejected, I would feel better about it. But just by itself, I'm just going to have to let that one go. Frank says yes about the penny. Yep. Zach says after hours. Can you explain what that means? Yeah. So Zach, you have the regular session of the day where you trade from 7:30 till 2 my time anyway. And then after hours, you can also trade. And before the market opens, you can also trade. But when you have earnings, there's a lot of after hours trading that's going on. So there's trading going on right now after hours. But a lot of the time, the after hours trading, the bid and the ask prices are pretty far away. And so there's not a lot of liquidity. So it's a little harder to get in, a little harder to get out because it has wide spread. So, but that's what it means. So even though the regular market session has now closed, Zach, they're still trading now for a couple hours that you can trade after hours. But like I said, the bid and ask spreads are pretty wide. I'll give you an example. If you look at XLE after hours now, the bid is 57.22, the ask is 57.28. So there's a 6-cent spread. During the day, you're going to have like a 1-cent spread. If I look at Zion's Bank, the bid is 46, the ask is 48.77. So there's a $2.77 spread. You could put a bid in at 46. If you got filled, you'd be pretty excited about it. But that's what after hours trading is. That's correct. The regular 9 to 4 trading time isn't the only time these stocks are affected. You remember when I was telling you about the overnight SPY trade, how people bid the price up after hours and they bid the price up pre-market? That's what I'm talking about. And like I said, interestingly, all the gains from the S&P since 1993 have not come during the regular session. They've come from people bidding it up in the after hours for whatever reason, or the next day in the pre-market, and then selling into the regular market. Bing He says, I have another plan to get into ROS trade tomorrow. If it goes above the high of today, then I will ride it till it goes below 50 EMA, something like the MA crossover strategy. Okay, that's fine. If it goes above today's high, then it shows you that people want some higher, because there is going to be some resistance at that today's high. So let me know what you end up doing, Bing He. Murat says, or we can call desperate hours. 100%, Murat. Zach, the reason that Murat said we can call desperate hours is that people kind of desperation make trades desperation at the end of the day and have to buy these wide spreads and so forth. Although, during earnings on a large company like Intel, I would imagine the bid-ask spread's pretty tight. Oh, it's still 11 cents. That's still kind of wide for Intel. But again, it is after hours and up 7.42%. That's amazing. That's amazing. Murat says, I think there will be a few sideways moves in ROST. Very well could be. Very well could be. But this is one of the better setups. This is about as perfect as you can get for a return to value. Got up here, got extended. Sellers took over this market. That brought it back down into the value zone, to the mean, right? That's essentially what a return to value is. It's a mean reversion. It did go into the value zone, although it did stop going down. So buyers did stay in here, did come in here and keep it from going lower. So, small range bars lead to big bars. Big bars lead to small range bars. Here's an example. Sideways movement leads to moves. Moves lead to sideways movement, and I like buying consolidation, especially if it's at the mean, especially when you have a trigger like this, because today the price went below yesterday's low. Market didn't like it down there. It's told you already. It just told you today that it tried to go down and reverse back up. That's good information to have. It's good information to have. It doesn't mean it can't go down, but it's an edge over having nothing at all, saying that, hey, it's like this. It's like you and your friend go to the pool and you look at the water and you go, God, I wonder if it's cold or not. And then you push your friend in. He goes, it's cold. He gets out and you're like, okay, so now I understand it's cold. I'm not going to get in, right? So it's kind of the same thing. Sellers tried to sell down here. The market didn't have it, moved it back up. So, it's good to know that sellers rejected this. I want to get into a trade where the prices has recently been rejected. That's the crux of my trading approach, rejections of different levels. We rejected and reverse. That's why I buy. On a 200-day moving average, you bounce off the 200-day moving average. Let's go back to the SPY, back to the 200, if we can ever find it. Under the 200, over the 200. I took this trade. I remember I took this trade. It rejected, closed back above. And this has turned into a monster trade if you mechanically tried this. So I'm basically a false breakout buyer. It tries to go down, reverses up, that's when I buy. Goes under the 200-day, goes back over, I buy. Under the 30 RSI, back over the 30 RSI, I buy. Murat says ROST has a very good uptrend if you zoom out on the chart. Murat says, Bing He, I looked at it. My concern is that the momentum is in the downtrend. To take it uptrend again, it will need a few days to first level off and then take off. Yeah, very possible. Very possible. All right, everybody. Well, listen, I'm going to get out of here, put the hiking boots on, go for a hike, slush around in the snow with my dog Katie, and come back, get something to eat, and then I have lessons tonight with Kamal, so I'm looking forward to that. So thank you, everybody, for coming. I just want to leave you off with two quick thoughts. First thought, please go out and do something nice for somebody today. Just something nice, just a little gesture. They may be having a bad day. They may just be ready to get off the reservation. You just never know. And they may have lost all faith in humanity, and if somebody, even a stranger, just one nice little gesture for them, it might just turn around. So hold the door open, say hi, just give them a smile, give them a wave, something like that, might turn their day around, and it's totally free, and it might improve their day. So it's a good risk to reward ratio for you and for them. You do something nice and you really may help them. So that's that. First thing, please go out and do something nice for somebody today, even if it's super small little thing. And second, if you're on your way out here, if you haven't hit the thumbs up button and you like today's content, I would really appreciate it if you would be able to hit the thumbs up button on the way out. So you're welcome, Marco. You're welcome, Bing He. All right, everybody. Thanks for coming. Hope you have a good rest of your day. Appreciate you being here. It's always nice to see you here. I always look forward to it. So I will see you tomorrow during the last hour. Okay, take care now. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.